Hello, this is TJ with the PTU Trend Jumper. Welcome to the Trend Jumper Special Free Edition training video. In this video, we're going to learn how to trade the crossover trade, the special Trend Jumper setup. We're going to talk about the indicators, the premise behind the trade plan, the rules of the trade plan, and then we're going to look at some examples. So let's go ahead and jump right in. The indicators that we'll be using consist of the jump line, the confirmation line, the trailing indicator, a 30 exponential moving average, and the actual trend jumper calculator, which has been tuned up to trade this specific trade plan for the Euro-US end of day using daily charts. This is what does all the heavy lifting for us. The calculator is actually going to mark all the trades on the chart. Begin by setting up a daily chart of the Euro-US. Now, this strategy will support TradeStation, NinjaTrader, or MT4. For the sake of this video, I'll do all the training using TradeStation charts, but everything I say on TradeStation and show you is going to apply on the other platforms as well. The first indicator I want to show you is the jump line. This is the main indicator. If a setup occurs above the jump line, it's going to be a long trade. If it sets up below the jump line, it's always a short trade. When you see the examples, you'll understand what I mean. Notice the data window to the right. When you click on any bar, you'll see all the values of each indicator showing up in the data window. So on this last bar, you'll see that the jump line was at 1.28915. The second indicator is called the confirmation line. This is the white solid line. This is such a simple strategy. The crossover occurs when the confirmation line crosses over and closes on the other side of the jump line. So for a long trade, it needs to come from below, cross over, and close above. And then the first green bar is the setup bar. So this would be a long setup right here. For a short trade, it's the opposite. It comes from above and crosses over below. And the first red bar that closes below is the setup bar. You have to look in the data window over on the right to see sometimes where that occurs. Luckily, the calculator is going to know this already, which I'll show you in a moment. Again, the first red bar that closes on the other side is the setup bar. Notice right here on this red bar, the confirmation line closed on the jump line. That's not good enough. Once it crosses below the jump line, then we're looking for the first red bar. Notice here we don't get one. Instead, it crosses back above and closes above. That's going to cancel any potential setup. And we'll look at some examples and you'll see how easy this is. The next indicator is this dark blue line. This is called the trailing indicator. We're going to use this blue line to trail our positions once the trade has progressed a certain amount. This will help us stay in for much larger moves and will also help us cut our risk and take partial profits if the price were to move against us. This light purple line is the 30 exponential moving average. Its sole purpose is to filter out some trades. Sometimes we'll get a crossover trade and it will butt up against or be in front of this exponential moving average. When that happens, the calculator is going to ignore the setup and we're not going to look for a trade. In fact, it's going to filter it out. And then finally, the magic behind the trend jumper is the calculator itself. This one has been tuned up specifically for this trade plan, but it works the same on all trend jumper trades. If you see a trade set up like this, the plus sign is always your entry. If it's above the jump line, the red dotted line, it's always going to be a long trade. If it's below, then it's always going to be a short trade. And all you have to do is click on the bar itself, and you can look over here in the data window and see the entire trade laid out for you. It's really simple. We're going to take profit at the second target right here. That's our objective with our first position. Optionally, you can also scale out part of your position at the first target. And that's definitely a good idea. The final position, we're going to trail the dark blue line. And I'll explain how we do that in a little bit. So notice over here on the left, you have a long setup and it never triggers in. And instead, the price moves down. This trade remains valid up until the time that we get a crossover to the other side. The confirmation line crosses over and closes. So instead, we get a short setup. 2 bars later, it triggers in. The stop is up here. This moves down. You could take profit here and here. The third target is another place to optionally take profit. This is not a target that we typically use. And then, of course, we're going to trail the dark blue line. And that's basically it. I mean, that's the strategy. We'll look at some examples, and I'll walk you through some trades, and you'll be good to go. I recommend that you go through your charts and do some back testing. Build a log of trades over the last several years. This is a slow-moving strategy. You might get 1 or 2 trades a month on average. So you can look at a lot of trades and really see how it's done. This has performed remarkably well over the last 10 straight years, and it continues to do so. Let's look at some trades. All right, I've rolled the clock back to last August. I mean, we can go back further, but once you apply this to your chart, you'll be able to do this on your own. In fact, let's take a look at it from this trade going forward, and I'll make this a little bit bigger. Okay, you'll see a short here, and it's really obvious. The confirmation line crosses below, and even if you forget the rules, the calculator will know to show you the trade. It's below the jump line, so you know you're going short, and the entry is at 1.2971. Now, I'm typically going to adjust that below 70, and I'm going to put my entry at 2969. Okay, and that's optional. You could also adjust it below the chart level right here if you'd like. That's something that we typically do more with day trading than with swing trading. But if you feel more comfortable making these minor adjustments, you certainly can do it. But it's not a part of this particular trade plan. Notice that it moves down and it hits the target here. So it went from 2971 down to 2833. That's good for 138 pips. And of course, you could have taken a partial profit off at the first target as well. So what about the trailer? How do we trail? The trailer is quite simple. Once we've gone a little bit past the first target, then we begin to trail the blue line. Okay? And when I say a little bit past, the way this was designed is that you want to calculate 10% past. In other words, from the entry to the target is 100%. 10% more. Once the price gets to that level, you want to start trailing. Okay? You could usually eyeball it because the price usually goes right on through. So once that happens, you're going to start trailing the solid blue line here. And on every time a bar closes below it, you're going to move your trailer 2 pips above the reading. Okay, so in this case, on this bar here, the reading is 29.81. You're going to put your stop at 29.83. Okay, as far as the extra digit goes, that's a fractional pip, the 5th digit. The way I typically use that is that I will round it a little bit further away. So if the entry is a fractional pip, I'll round it down a little further. If the stop is at a fractional pip, I'll round it a little further away just to give it a tiny bit more room. But that's basically all I do. Otherwise, I just ignore the extra digit. I'm not interested in tenths of pips. I'm only interested in pips. Okay? So as this moves lower, the next day the bar closes and the reading has moved down to 29303. So I'll round that to 2930. I'll round that to 2931, and then I'll put my stop 2 pips above that. So the stop will go to 2933. Okay, and I'll just move it down accordingly to 2933. 3.33, right about there. And every bar that closes below, when the day closes, I'll go ahead and move my stop a little further down, and like that, I'll trail it all the way down. And you can see this trade finally ended right here. The last bar to close below is this bar here. The reading is 2487. I rounded up to 2488. So I'm going to put my stop not at 2490. I'll put it at 2491. Okay, for my stops, I'm typically going to round it off of the 5s and 0s. And if you want more information about the crossover trade and the key level adjustments, take a look at the free Dow E-mini 5-minute trade plan. Even if you're not going to trade futures, you can gain greater insight about this strategy by reviewing that training video that comes with that indicator. Okay? So I recommend that you do that. All right, let's forge forward. On the next trade here, this is on June 25th. There's a short trade. It triggers in, it comes up, and it stops out. Now, you shouldn't be worried about some trades losing. This trade plan has won over 70% of its trades for the last 10 years, which means you're going to lose somewhere in the 25 to 30% range. Okay? But it's got a really nice risk-reward ratio. Okay, so even when you lose, you're losing this much here, but you had the chance of making this much, which is practically 1-to-1. Sometimes it's going to be more than 1-to-1, and with the trailer, it could be even larger. All right, so you just take your losses. It's okay as long as you put on very small risk. Never risk more than 2% of your overall trade capital on any given trade. It's very important. Now, with the day trades, I don't really like taking setups that happen within setups, but I think with these end-of-day swing trades, it's perfectly okay to do that. You can literally add your position. That's not going to happen very often, but when it does, these setups typically work quite well regardless. Okay, so the next trade comes on July 5th, triggers in. You can see you could take profit here at the first target. Soon as it passes that first target, you're going to move your stop, but you want it to go at least 10% beyond. Okay, so you measure from the entry to the first target. Let's say that's 100 pips, okay? That means when it's gone 10 pips beyond, you're going to start activating the trailer. All right? So you have to be patient. In the meantime, you could literally take another trade here. All right? This earlier trade comes down, hits the full target, right? The second trade doesn't make it and stops out. All right? So, again, these are optional. If you don't feel comfortable with adding to an already existing position, you don't have to do it. All right? I just wanted to point it out to you. So let's just forge forward and go through the walkthrough. Here's a short trade that cancels. Instead, it gets long. This is already now August 21st. So you can see that these are nice quality trades. They take a long time to develop, and you just have to be patient. What's great about them is you only have to check them once a day. If you want to check them in the morning to see if you have to move a stop, that's fine. But pretty much you wait for the bar to close. Okay? So here's a long trade. Gets long at 24.98. Am I going to adjust that up to 25.02? Yeah, I am, but you can see it wasn't necessary. It went right through, and ultimately, well, it doesn't quite get to its first target yet, but then it does. So you got to be patient. The stop is down here, okay? And then it zooms up, hits the full target. Now, obviously, you're trailing the blue line. It goes up. Again, you can take additional profit off at the third target. That's optional. Trailer keeps going up. Last bar to close above is this one. That closes at 29828, which is above the jump line, which is at 29629. So 2 pips below that is where you stop out on that final position. Okay. Here's a canceled trade, never triggers in. Here's a long trade. We don't know if it's going to cancel. Ultimately it does. You get the short. This one I already showed you earlier. You can see that it zooms to target here. Well, it doesn't really zoom. It actually takes, several days, maybe even over a week. And when the trade finally cancels or stops out, it's maybe a couple weeks. Then you get a long trade. Again, more targets to be had. This is not a trade. Then you get another long trade. Hits the first target. And then comes down and stops out. So it pays to take profit at that first target, doesn't it? Because that's going to help offset some trades that don't quite have enough to continue. So even though you take a loss on part of your position, taking profit at that first target really helped out on that particular trade. Okay, this brings us into this year, 2013. Here's a long trade here, triggers in. You can see it zooms up, hits both targets. You get to add your position here. That also hits the first target and the second target. Okay, and then both those trades are going to stop out. However, keep this in mind. If you hit the second target, make sure you don't take a loss on the rest of your position. In fact, part of this trade plan is if you get to within 95% of that second target, you want to lock in at least 100 pips of profit. Okay, I forgot to mention that earlier, but that will at least protect you if it does come down hard. And instead of taking a loss, you get 100 pips. Okay, that's only if it's gone 95% of the way. We call that trading for profit. Okay, all right, let's continue. Short trade here barely triggers in. All right, but the stop holds, it pushes lower, and ultimately hits some nice targets. Look, all right, and remember, you're not trailing yet until you get 10% past that first target. So you're still trailing down. Last bar to close below is this one, so looks like it's going to stop out right about there. Really nice trade, very successful. Okay, now, and that takes us up to the end of the year. So there really hasn't been any setups since February 7th, but if you look at the chart, you could see we might be getting a long trade. Look at the confirmation line. It's coming up, it's crossing over. Maybe Monday or Tuesday. Maybe we'll get a long setup. Maybe by the time you download this particular trend jumper strategy, you'll be able to track this trade. Now again, I highly recommend that you go through a bunch of trades, build a log of trades in a spreadsheet so that you can study the win-loss column. Even click through and try to think through the strategy as I've laid it out to you. Okay? And that's basically it. I think you're going to love this. Thank you for your time. If you want to learn more about the trend jumper, you're certainly welcome. We take day trades and we talk about swing trades all the time in the private Trend Jumper Owners Club trade room. And if you want to actually move on up to the full trend jumper strategy, you're certainly welcome. We'd love to have you. You'll learn so much. This is a wonderful strategy. There are so many ways to trade it. And this is really just the tip of the iceberg, although it is a very profitable one. Thank you, everybody, for your time, and I will see you hopefully soon. This is TJ with NetPicks.com and the PTU Trend Jumper Trade Strategy.